So today, we're diving into something really ambitious, a complete financial overhaul for an entire country. The Maldives has just dropped this incredibly detailed blueprint to build a modern, resilient economy, and we're going to break down exactly what it all means.
All right, let's get right to the heart of it. How in the world do you build a 21st century economy when your country is a chain of nearly 1,200 islands spread all across the Indian Ocean? I mean, that's a massive logistical and financial puzzle. Where do you even start?
Well, the Maldivian government's answer is this: the National Financial Sector Development and Governance Policy. Think of it like this: they're not just renovating a room, they're drawing up the architectural blueprint for an entirely new financial house, from the foundations all the way up to the roof.
What's really striking here is just the sheer ambition of it all. This is not some minor policy update. We're talking a complete root and branch overhaul. The goal is to touch literally everything, from the power of the central bank right down to the way a shopkeeper on a remote atoll gets paid. So when you have a project this massive, where do you begin? You start with the foundation, right? The first pillar of this whole reform is to forge a much stronger, more independent central bank that can act as a truly impartial guardian for the entire economy. And here's the crucial part. They're giving the central bank a crystal clear, legally protected job description. Its two main jobs are simple: keep prices stable and keep the financial system safe. This is absolutely essential for building trust in the long run, because it builds a wall between the bank and any short-term political pressures that could destabilize the economy.
The new governance model follows a classic, proven structure. Think of it like any well-run company. You've got an independent board that provides oversight and sets the long-term vision. Then you've got the governor, who acts as the CEO, actually executing that vision. And under them, you have deputy governors managing the day-to-day operations. It's a clean separation of powers, and it's all designed to make sure everyone is accountable. Okay, so that's the high-level stuff. But how does this actually affect people's daily lives? Well, the next step is a full-blown payments revolution, and the goal is to modernize every single financial transaction for every single citizen. The change here is just dramatic. The old system was clunky, fragmented, and pretty much locked down by the banks. The new system, it's all built on openness. Just imagine a single national QR code that works everywhere, for everything. Instant payments for everyone. And a system that actually forces the big banks to cooperate with innovative new fintech companies. It's a huge leap forward.
And here's the core philosophy that's driving all that change. New financial tech companies, digital wallets, payment apps, what they call payment service providers, or PSPs, they won't be treated like outsiders anymore. Instead, they're going to become integrated parts of the banking system itself, with banks being legally required to give them the access they need to operate and innovate.
Okay, so we've got a modern central bank and a revolutionary new payment system. But how do you make sure the whole thing is actually secure? Well, that brings us to the financial safety net, which, let's be honest, is the boring but absolutely crucial part of the whole plan. This new toolkit has several layers of protection. There's an early warning system to spot and fix troubled banks before they fail. There's a deposit insurance scheme to protect your savings if a bank does fail. And then there are what are known as macro-prudential tools, which is a fancy way of saying they have a way to zoom out, spot system-wide risks like a housing bubble, and stop them before they cause a real crisis.
Now, a plan is just a piece of paper without a deadline. And believe me, this policy has a very concrete, phased plan to turn this entire blueprint into a reality over the next 6 years.
So phase one, the first 2 years, is all about laying that foundation, getting the central bank reformed and putting the new laws in place. Phase two focuses on growth, building out the markets and the credit systems. And then phase three is when the really cool innovation gets unlocked, with new financial products and a focus on sustainable finance.
And you might be asking, who's going to make sure all this gets done? Well, to hold everyone accountable, a new, high-level body is being created. This National Financial Sector Council will bring all the key players, the central bank, the Ministry of Finance, the regulators, to the same table to oversee the whole process. They'll even issue public progress reports every year.
So after all this technical talk about central bank governance and payment systems, what is the point of all this? This quote from the policy document just brings it all home. The ultimate goal isn't technical, it's human. It's about making sure that households, small and medium-sized businesses, and especially people in remote areas can finally get the financial services they need to thrive. Which leaves us with a final, really fascinating question. The Maldives is tackling a unique set of challenges here, for sure. But the principles behind this plan, things like transparency, interoperability, and inclusion, those are universal. So as they build this new system, you have to wonder, could this blueprint for a modern island economy actually become a model for other developing nations all around the world?